After just about a month worth of ebbing and flowing, some ups and plenty of market downs, we are just about through the month of April, finishing more in the red than not. Now, before the month's end, we've managed to kick off into earnings season. We've had a lot of scattered reports, economically speaking, giving way to insights into our financial futures. Now, there's still a lot of deals out there as well for all of us to sort through. So today I want to get to our need to know macros, follow it all up with 6 discounted dividend stock opportunities for you to have your eyes on now. And the only question then remains, are you ready? So as we always do, I want to kick off and get started here with our macros, which take note of the fact that every earnings season, there's always plenty of excitement out there when it comes to investors on the street, meaning emotions are just running higher than they normally are, and it isn't always the best time to throw all of your money into the market should we see a post-earnings season pullback. However, we're also still battling a lot of jitters from pre-earnings season, mainly when it comes to the Federal Reserve just rain checking all of their interest rate cut dates, as they aren't so confident in all the economic data that's been pouring out recently, primarily when it comes down to inflation. The biggest setback, our most glaring, biggest red flag here is inflation coming in at 3.5%. We saw then consumers are still spending with plenty of firepower in their wallets, helping to spur economic strength. Not a great sign. And we also followed that up with our most recent economic growth indicator when it comes down to GDP. A report that came out on Thursday. More insights came in on Friday with our Michigan inflation expectations and the consumer confidence reports, all to really just sum this up for you as best as I can. I'm going to say this. I've been sharing for a while now. This environment, domestically speaking, is likely going to be one that we should get quite comfortable in, meaning we're going to see ups and a lot of downs. And don't get me started on a global scale, because with the world on the brink of utter chaos, this is just a lot of noise out there that can easily spook any of you away from investing. And that, my friends, will ultimately kill your financial future. So if you're done scaling an investment foundation with, say, an exchange-traded fund, or you're just ready to take on your financial future with individual stocks, I have 6 dividend stocks for you today that are all bound to soar in the future contingent upon our economic bounce back, which the best news here is it's not a matter of if, it's a matter of when. So first up, let's talk about Agree Realty, ticker symbol ADC, which is an $8 billion leader within the real estate industry focused on acquisitions and the developments of properties similar to those within the Realty Income portfolio. So in other words, some room to continue to grow and compete with Realty Income. And with interest rates exactly where they are right now, Agree is really just on a ticking time clock down to the moment the Federal Reserve actually lowers rates. So perhaps now, when the stock is trading for under $60 per share at $58, makes it a great buying opportunity. Now, growth-wise, let's just zoom out together to see over 202% worth of share price appreciation over the last decade, as this real estate investment trust remains on the come up and a really solid competitor, at least on a smaller scale than Realty Income, as it also pays a monthly dividend. But we also have plenty of great signals coming right down to the insiders themselves who have been buying more shares. Now, clicking into hedge fund activity, we could see over 50,000 shares purchased last quarter as well. Additionally, we also have bullish signs here from analysts coming in with a projected share price at $66.05 per share. That's about 13% worth of upside expected. And until then, it's the nice dividend here coming in at a yield of 5.14% to enjoy, which has been on a nice streak of 12 years so far, slowly increasing by about 2% year over year. Next up, I want to go ahead and talk about United Parcel Service, ticker symbol UPS, which is a logistics leader, as you probably know. But more importantly to discuss is just the fact that it recently reported mixed earnings. Now, we have to consider the fact that it has been a long year worth of high interest rates and inflation, meaning cost-cutting measures were in place for businesses globally. However, as conditions were expected to get better, the company actually saw it in their financials. But let's check into the stock share price here to see a very similar stock activity reading. Note the climb to $156 per share earlier this year before dropping to $146. Now, a PE right now at 18.4, and just recognize the power of a poor economic backdrop, because zoom out with me, we see over 104% worth of share price appreciation, with bullishness now also coming in from analysts as well at $162.88 per share expected. That equates to about 11% worth of upside, sounds like a quality opportunity, and cheer on the bullishness from hedge funds as well, with over 2 million shares purchased last quarter. But when it comes to UPS, I'm actually thrilled to have you note that their CEO remains steadfast on growing that dividend. And right now, that dividend yield's coming in at 4.45%, which it's been on a dividend streak for the last 55 years, growing on average by 10% year over year. Now that is not too shabby, but you may be looking for, say, a bit more of a household name, literally, in the home improvement arena. So let's talk about Lowe's, ticker symbol LOW, which many investors said would not necessarily come back from seasons ago worth of great earnings. But yet here we are up on the year, yet with the stock having slid more recently from our economic conditions, whereas Home Depot is actually experiencing the same exact type of hits. But we get Lowe's now for Lowe's at $230 per share with a PE at 17.4. However, zoom out to see almost 500% worth of share price appreciation over the last decade, along with analysts projecting about 11+% worth of upside, climbing up to a share price of $257.65 per share. Now, we're going to need the market conditions to correct in order to see better housing reports, from housing starts to new home sales and all the DIY trends starting back up. But for now, we'll collect on the 1.91% dividend yield. That's been growing on average here by 24% year over year, with an already rock solid history of 63 years worth of a dividend track record. And should those dividend stocks not exactly meet your investment criteria, well, I got good news. I have 3 more coming up. But before I actually cover them, I'm going to go ahead and key you into quite an appalling statistic. And that's that 80.8% of you, for whatever reason, haven't actually taken the action to subscribe, which speaks volumes. Now, if you're serious about this financial freedom journey, join me right here, right now, in subscribing to the channel for all the market insights and stock ideas as they come. Now, in addition, do me a favor, which is ultimately doing you a favor. Tap on that thumbs up button to let me know that this is the content that you're actually enjoying and gaining value from, so I know to continue to make more videos just like this. With that, I want to get back to it with Medtronic, ticker symbol MDT, which is arguably the largest medical device company in the industry, focused solely on medical technology and medical devices, which means less diversity and more rough goings during harder economic times. Yet with technology like pacemakers and all the alike, we have quite a moat around Medtronic. So we're here for it at $80 per share after a climb back almost to $90 per share not long ago. Zooming out, you're going to see 73% worth of growth, not as much as the others, but a reliable one for stability in a portfolio, and it does deliver through on share price appreciation. Analysts, after all, are expecting the share price to climb to $94 per share. It makes for about 16% worth of upside, along with hedge funds scoring over 7 million shares worth of Medtronic last quarter. But sit tight with this Medtech King for the dividend yield, because it's coming in hot with a dividend at 3.43% worth of a yield, a 45-year history, while growing the dividend year over year by about 13%. And if Medtronic isn't exactly delivering through on all the safety and growth you're looking for, it isn't too late to double down on Pepsi, ticker symbol PEP, a soft drink and salty snack kingpin that's been hit hard not too long ago from the weight loss line that they had, but now beginning a comeback. Right now, it trades for $177 per share, but we see that it remains down on the year as a whole, whereas it was once over $190 per share. And zooming out to the last decade, we see over 175% worth of share price appreciation. You see, sometimes it really is just slow and steady wins the race, especially when analysts are projecting more upside here to about $190 per share. And until then, you're going to collect on all of the dividends thanks to the yield coming in at 3.06%, which has been on an ongoing streak for nearly 60 years while growing by about 11% year over year. And then we have one dividend stock that I am the most bullish on when it comes to today's list. It's Darden, ticker symbol DRI, which is a restaurant operator that has fared me very well since I scored it all the way back in the March of 2020 lows. And my only regret, to be honest with you, is not loading up on Darden even more, given the nature of their business, managing some of the best, most popular brands within the restaurant space in the United States, like Olive Garden, the Longhorn Steakhouse, and the Capitol Grill. Now, when it comes to Darden, here's the deal. People have to eat. Yet during harder economic times, they want to save, but they also always feel the need to treat themselves, to which Darden allows for the dining out experience to have a variety of thresholds depending on how much money you can spend. But the market is now fearful, to which Darden actually has been plummeting to $156 per share. That sounds the buy alarm for me. We see a lot of growth over the last decade, about 368% worth of share price appreciation, all while analysts project over 15% worth of upside, climbing up to $180 $180.33 per share, and my confidence on Darden is very high. Now, until then, we're going to enjoy a 3.35% dividend yield that has been experiencing average growth rate here of about 23% year over year for the last 20 years. Investors, there you have them, all 6 dividend stocks. Comment your thoughts on each of them down below. Be sure to catch more insights in this video right here or subscribe for all of my latest.